Good morning. Today, we're diving into a business story that's turning heads. S4 Capital's shock financial results for 2025. On January 26th, S4 Capital announced results that blew past expectations. Investors and analysts had braced for a tough year, but S4 Capital delivered a major turnaround. The company reported higher revenue, stronger profits, and much lower debt than anyone predicted. This wasn't just a minor improvement, it was a dramatic outperformance. S4 Capital's success highlights the resilience of digital advertising, even in a challenging economy. Their results show that smart management and a focus on digital services can pay off, even when the market is tough. The company's leadership made bold decisions that strengthened its finances and restored confidence. In the next scenes, we'll break down what S4 Capital announced, explain the key financial terms, and look at why this news matters for investors and the wider market. We'll also hear from the company's chairman, Sir Martin Sorrell, and explore what's next for S4 Capital. Let's get started with the basics behind the numbers. This is a story of beating the odds and setting a new standard for digital-first companies.
To understand S4 Capital's big win, let's break down three key terms: net revenue, EBITDA, and net debt. Net revenue is what's left after a company pays the direct costs of its services. Think of it as the real earnings from its core business. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's a measure of how much profit the company makes from its main operations, before extra financial details are factored in. A higher EBITDA means the business is running profitably at its core. Net debt is simply total borrowings minus cash on hand. Lower net debt means less risk and more financial flexibility. These three numbers, net revenue, EBITDA, and net debt, are the heart of S4 Capital's story. In 2025, S4 Capital beat expectations on all three fronts. They earned more from their services, were more profitable, and slashed their debt. Understanding these terms helps explain why the market was so impressed. It's not just about making money, it's about managing it wisely. S4 Capital's triple win set the stage for a surge in investor confidence. Now let's see how they pulled it off, starting with their revenue. These basics are the foundation of the company's turnaround.
The first big surprise was S4 Capital's net revenue. Analysts expected around $664 million, but the company outperformed, signaling stronger business than anyone thought. S4 Capital had warned of a nearly 10% revenue decline, but the actual drop was only 8.5%. Beating their own forecast sent a clear message: the company's digital services are still in high demand. Even as clients tightened budgets, S4 Capital held on to business and proved its value. This revenue beat set a positive tone for the rest of the financial report. When the top line is stronger than expected, it often leads to better profits and cash flow. For S4 Capital, this was the first domino in a series of wins that changed the narrative from concern to triumph. Their revenue resilience was the foundation of their 2025 success.
Next up, profitability. S4 Capital's operational EBITDA beat the $75 million forecast. Their EBITDA margin hit about 12%, showing they turned revenue into profit efficiently. This margin proves the business model is both sustainable and profitable. Good management kept costs in check, even as the industry faced pressure. S4 Capital avoided the trap of cutting prices just to win business. Clients paid for quality, and the company maintained healthy profits. This strong profit performance reassured investors and reinforced confidence in the company's leadership. Profitability, alongside revenue growth, was key to the market's positive reaction.
Perhaps the most impressive news was S4 Capital's dramatic reduction in net debt. Analysts expected net debt around $133 million, but the company came in far below that. This was thanks to smarter treasury management and improved working capital practices, getting paid faster and managing expenses better. The result? More cash, less debt, and a much stronger balance sheet. Their debt to EBITDA ratio dropped to about 1.1 times, far better than forecasts. This shift made S4 Capital look much less risky to investors. Lower debt means more flexibility to invest, hire, and weather tough times. By taking decisive action, S4 Capital proved it's a well-managed company. This financial turnaround was a major reason for the market's enthusiastic response. Investors saw a company that's not just surviving, but thriving. S4 Capital's debt reduction was a game changer for its future. It's a textbook example of how to strengthen a company's financial health.
When the results came out, all eyes were on Executive Chairman Sir Martin Sorrell. He praised the team for beating revenue and profit targets, and for the big improvement in liquidity. Liquidity, easy access to cash, means the company is safer and more stable. But Sir Martin didn't just celebrate. He emphasized there's more work ahead. He called for renewed focus on growing revenue and improving margins in 2026 and beyond. This balanced message reassured investors the company isn't resting on its success. Sorrell's leadership is about building a strong, sustainable future. The improvements in 2025 are just the beginning of a longer-term plan. Investors took this as a sign that S4 Capital is in capable hands.
Investors loved the news. S4 Capital stock soared 33% in a single day. The reason? The company beat expectations on every front: revenue, profit, and debt. This clean beat left no room for disappointment. The dramatic debt reduction made S4 Capital look much safer, attracting more buyers. The new debt to EBITDA ratio was a game changer, lowering risk and boosting confidence. S4 Capital also announced a steady dividend, signaling management's confidence in the company's future. This combination of strong results and continued shareholder rewards created a perfect storm for the share price. Investors saw a company that had turned the corner. The market's reaction was swift and overwhelmingly positive. S4 Capital's stock surge was a direct result of its triple win.
So, what exactly does S4 Capital do? It's a digital-first marketing and advertising company, focused entirely on online media, data, and content. S4 Capital helps clients with social media, digital ads, video content, and data-driven marketing. The company operates in 33 countries with over 6,300 employees. Most of its revenue comes from the Americas.
Digital content, digital media, and data, and digital transformation services. This integrated approach makes it a one-stop shop for clients' digital needs. Founded by Sir Martin Sorrell after leaving WPP, S4 Capital was designed to be faster, more agile, and purely digital. Its recent performance shows that this strategy is working. Even in tough markets, clients are investing in digital, and S4 Capital is ready to help them. The company's digital-first focus sets it apart from traditional ad agencies. S4 Capital's success story is a testament to the future of marketing.
After a standout 2025, what's next for S4 Capital? The January announcement was just a preview. The full audited results come out in March 2026. Investors will be watching for more details on each division and region, plus new targets for 2026. The big questions. Can S4 Capital return to revenue growth? Will it maintain or improve its profit margins? Can it keep debt low? The company's discipline in managing cash and costs will be under the microscope. S4 Capital has reset expectations and rebuilt confidence. Now, the challenge is to deliver on growth and keep the momentum going. Sir Martin Sorrell's vision is clear. This is just the beginning. The next chapter for S4 Capital starts in March. Stay tuned for what's ahead.